Hello and welcome to this special coverage of the earnings and IT bellwether. Infosys has come out with its Q3 set, where the key takeaway is indeed the guidance being raised by the company to 4.5% to 5%. While the earnings look actually quite decent coming in for the company, there's been a strong growth of 6.1% YOY in the constant currency terms. Even the operating margin has seen an expansion of 80 bips on a YOY basis. But let's understand more of the internals coming in from Infosys, because just after TCS, which got a thumbs up from the markets as well, the earnings did surprise, and it's Infosys guidance that has surprised. So let's understand more on the internal front, and Anisha Jain is here with us to break down the number and do the number crunching for us. Anisha.
Oh, well, yes, it's a good set that Infosys has reported this quarter. There's a clear top-line beat coming around $4,939 million. We were working with a number of sub $4,900 million. So that's the clear beat. And that's the reason the bottom line is also looking very healthy, ahead of our expectations at 6,800 odd crores, despite the margins being in line with expectations. HCL Tech reported an inline set of top-line number. TCS reported an inline set of numbers on the top line, even L&T Tech. So this is the first IT company which in a seasonally weak quarter has managed to surprise on the top line. And that's the reason which is giving them the confidence to upgrade the guidance to 4.5% to 5%. Now, the street was penciling in that there is going to be a guidance hike, but they were not expecting it to this limit. So there's a bit of a surprise, even in terms of the guidance upgrade that has come in, because they've managed to upgrade both ends of the guidance. In terms of the other internals, the deal win is steady at $2.5 billion, slightly towards the lower end, but nothing to get too worried about. Having said that, if you look at the internals, I think this time the good news is that the BFSI vertical has returned back to growth. So the BFSI vertical has reported a growth of around 5.8% on a year-on-year basis, which is very smart. It's the retail segment which has been flattish, but manufacturing has picked up quite smartly. So financial services getting back and manufacturing doing quite well is the good news coming in. Even North America as a segment has bounced back for the company with that 5% year-on-year growth coming in. Even in constant currency, the growth is around 4.8% on North America. It's European business that also continues to be quite strong. The only niggling worry, if I have to really call out, is the fact that attrition has gone up quite substantially at that, 13.7% versus 12.9%. The overall employee count is positive, so there has been a net addition at 3,23,379 versus 3,17,788 last quarter. But overall, I think it's a good set of numbers. The constant currency growth of 1.7% is way ahead of everyone's expectation. Dollar revenue, margin, profitability, clearly a good set coming in. Expect perhaps not only a thumbs up by the stock price tomorrow, but I do anticipate there's a possibility of even upgrades to come by. We do have Sandip Agarwal also joining our show from Sowilo Asset Management. Sandip, hi, good to be speaking. View that not only there will be a thumbs up from the screen on the stock price, but there could be upgrades as well. And also put it in context for us, because Infosys has been one of the best performing IT stocks so far. Do you see further upside on the stock there?
Infosys numbers definitely look better than the other companies which have reported, so slightly better than expectation also, and also the guidance upgrade. But I think, as you rightly mentioned, guidance upgrade was already built in the numbers as well. So I wouldn't read too much into that. And while numbers are good and commentary should also be okay, and guidance upgrade is seen as a sign of confidence, and to top up that, President Trump assuming office, and corporate tax cut, all these augurs very well for the sector and the companies. But my limited point, as rightly mentioned by you as well, was that the stock is one of the best performing stock, and that honestly limits how much money could be made from here, because I think last year around same time, around October, November was the time when there was postponement in hikes and postponement of variable pays. That was the time probably it was best time to add, because stocks were available at a really, really cheap multiple. Now, everything positive could happen is already priced in. So I will be a little skeptical from that perspective. Otherwise, this set of numbers are really good, and commentary should also be nice in my view.
Yeah, the commentary is positive, but you're right to the extent that perhaps in Q4 there would be a headwind of wage hikes because as per reports, the wage hike is going to be implemented in February, which is obviously very delayed, but there could be a bit of a headwind there on the margin front. But Sandeep, what do you make of the kind of performance that we have seen in financial services, which is up 6% almost on a year-on-year basis, and even North America is up 5%. Would you perhaps take it as a sign that things are on the mend in North America and are only going to get better from here on?
Yes, I think things should improve. Only thing which is not factored in right now is if there is any increase in cost of business, because then there is a real challenge, because that is not what is priced in the estimates. So I don't see big upgrade in numbers from this, but it is really a good set of numbers among other companies which have reported.
Deal wins, because that's slightly on the lower end of what the expectation was. It's not a bad number at $2.5 billion worth of large deals. But would you be concerned about that? And what other important commentary would you watch out for from the management when they do join in the next 30 minutes?
So I think management should guide a little bit on the demand environment and how they are seeing on the discretionary side of it. And if those answers are optimistic side, then we definitely see the stock reacting positively.
Point taken. And within the pecking order, because as we have discussed, Infosys had run up quite materially, and the gap between Infosys and TCS was widening a bit. What's your pecking order within the IT pack? Would you recommend going with TCS or Infosys or any other name right now?
So, we run a PMS and we have to be compliant with the regulations. So can't call out any name on the stock, but let me put it this way that, there are very few pockets where value is left. So we will be more in a watchful mode for some time till value corrects. And then we will probably, if value comes back, then we will probably proceed.
Srishti also joining in, but Sandeep, also help us that after looking at Infosys numbers, does it paves way for some of the other IT majors, especially in the mid and the small cap, where hopes can be building high with respect to the BFSI vertical specifically? Because it was TCS which was highlighting that yes, indeed, there are some green shoots that are visible now, and even Infosys, like Anisha was just highlighting, that BFSI has done decently well. What are your takes on that? Then hoping for a positive reaction on Infosys, the other IT majors can also take some cues from that?
Yeah, there will be a rub-off positive impact on the industry, definitely. And BFSI is one key sector which has potential to move up the whole sector. So I see that as quite positive.
Let you go on that, and thank you so much, Anisha, for taking the time out and breaking down the numbers with us. So that was the review of Infosys earnings. Definitely a good set coming in this time around, and a surprise onto the guidance front. But Sandeep was just highlighting that the analyst community was actually looking forward to a guidance upgrade. Yes, indeed, the ET Now poll did suggest that the guidance upgrade was in the range of 4 to 4.5%. But what the company has actually done is they have gone ahead and raised the guidance for constant currency growth to 4.5 to 5%. So that's a 50 basis points an uptick versus the estimates, and operating margin guidance does remain at 20 to 22%, and that remains unchanged. The management commentary is on the positive side. The higher attrition is a little bit of worry, but more comments awaited from the management itself. But yes, indeed, that's the review of Infosys Q3 FY25 numbers. But with this, it's time to slip into a very short break. Viewers, don't go anywhere. We'll be right back.